everyone, good morning. You're watching Market Fatafat on ET now. I'm Mubina Kapasi. Markets looking pretty okay. We have the Nifty and the Sensex gaining in trade. No complaints over there because it's a 0.5% of a rise seen on the Nifty. We have reclaimed 11,350, though we are slightly off that high point of the day of 11,380. 55 points on the Nifty. The Sensex as well is gaining. Its realty and metals. These are the two indices that are really standing out, but IT and PSU banks are a bit on the losing end of the market. But the centre fears fiscal stress for states at the end of the GST compensation period. That's the exclusive story we are getting from sources. Let's head across to Ashna Mishra for more details. Hi, Ashna.
Yes, the centre right now fears that the states may face a fiscal stress once the GST compensation period ends in 2020, and they have said that there is an urgent need right now for the GST revenues to stabilize so that states do not face any fiscal stress after 2022. And the centre right now also feels that it is important that the GST collections going forward are adequate so that the development expenditure of the centre as well as the states can be funded. So the government now feels that there is an urgent need to ascertain the recent decline that has been happening with respect to the GST collection, and it's equally important to reverse this trend going forward. Remember, this is also the reason why the government recently formed a committee which has been asked to assess the reasons of this decline and to suggest measures to augment the GST collection numbers. Now, this step came after the GST collections in the month of September had touched a 19-month low of about 91,900 crore rupees. Also, for the clarity of our viewers, I would like to remind that when the GST Act was implemented, there was also a provision of compensation fund under it, under which if the state's revenue growth annually is below 14%, then the states are given a compensation from this fund, and this period will be ending in 2022. So the centre has raised a red flag and has asked the states to look into the matter urgently and ensure that the collection trend reverses.
All right, thanks a lot, Ashna, for that. Well, that's the Big ET Now exclusive of today. But Market Fatafat is all about talking about those individual movers and shakers. And to do that, we have with us from our research team, Varun and Vivek, and we're joined by Himen Kaparia, KR Choksi Securities on the technical. So good morning to all of you. And let's kickstart the show with the result candidate, that's Infosys. Now, its second quarter numbers seem to be okay, mostly in line. It did raise its revenue guidance for the year. Well, at least it did hike the lower end of the guidance. But all in all, what you could say is that it was slightly mixed this time around. They did say that 9 to 10% on a constant currency basis for the year ended March 2020 is where it expects to grow. Digital revenues total 38.3% of Infosys's overall sales. Operating margins managed to improve to 21.7%. Of course, the consolidated net profit fell 2.2%. But Citi has maintained a buy. They believe, however, that the recent returns may cap the near-term upside. Credit Suisse, however, has maintained an underweight as they believe that there is a slight miss in the revenue, though margins is something that has fared better. But, Infosys is tanking, more than 3% gone. In fact, it's taking down with it the entire IT space as well. But on the flip side, we have the metal stocks that are really rallying, and how. In fact, some of the top Nifty gainers are all metal names. So, Himen, your view on one of them, Tata Steel, because that ferrous space certainly shining brighter. Your view?
A very good morning to you, Mubina. Thank you for having me. I would suggest to hold. The market itself is in a mood to stage a recovery. Tata Steel is not an exception. We've seen almost a 3.5% long build-up. The stock was oversold. We are recovering from an oversold situation. A small upside is expected. So hold with the stop loss of 343, target of 3.
Okay, whole call on a Tata Steel. Varun, let's talk about Future Enterprises. What exactly is it that you're identifying about this stock today?
So Future Enterprises is a debt-laden company. It's got around 6,500 crore debt. Now, Future Retail, which rents assets from Future Enterprise, has decided to purchase these assets. So essentially, you will see over a series of tranches 4,000 crores flowing into future enterprise, which will be used purely for deleveraging. That means 4,000 crores will effectively be added to the market cap of future enterprises. Also, paying interest on around 6,500 crores of debt, is a significant burden, which will be reduced now to the tune of around 300-400 crores. So it'll really augur well for the counter. It's already up like 10%. It opened up 14-15%. Now, even for the parent retail, which is buying future enterprises, in the long run, it'll do really well because they'll have to raise some money near term, which will hit them. But once that 650 crore rental, which they're paying enterprises, goes away every year, flows down to the bottom line, even if you tax that at 22%, you're still left with around 520 crores of additional profit, which will then trade at 25 times on the exchange. Even if I deduct interest of around 200-300 crores, I can still see 200 crores to 300 crores trading at 25 times. So that's significant market cap addition for them as well, which will play out in the long run. So together, both stocks should be extreme beneficiaries of this move.
Okay, that's interesting analysis. Future enterprises, which is surging a good 10% today in trade. Okay, we have Vivek, the insurance data that's out, and it has definitely eased in the month gone by. Vivek?
Well, that's right. So what you need to look at is the new business annual premium equivalent. And although, there is some amount of growth, significant moderation seen across the entire insurance asset class. In fact, the ULIPs was something that is actually tied to the equity markets that's seen significant slowdown. Have a look at how HDFC Life has done. The new business APE has gone down by almost 20% on a year-on-year basis, and again a contraction of almost 7% coming in for ICICI Prudential. Now, what had actually happened is that even before these monthly numbers came out, the fears in the market was that the slowdown and the contraction would be very, very high. It's not as intense as it seems, on the back of which we're seeing a slight relief rally in some of those names, or slight short covering rally, some of the F&O names like Max Life as well as ICICI Prudential. HDFC Life, though, is down over 1%, down around 0.5% in today's trading session.
All right, that's of course the most recent insurance data. Remember, we have seen great growth, but now that growth is slightly ebbing off. Okay, more result reactions. Bajaj Consumer, take a look at that stock as it is now declining 2%. It's at a 52-week low of, just about close to a 52-week low. The 52-week low was 232. Right now it's at 238 rupees. Now we do have the revenue, which has grown a meager 2% at 217 crores, but the profit after tax has jumped 11% at around 57 odd crore rupees. Now on a standalone basis, we had the net profit 10.9% growth and a 2.6% sales growth. The standalone EBITDA was very small, 2.7%, but with the change in the corporate income tax rate, the effective tax rate of the company has reduced dramatically from 21.5% to only 17.5%. So that in turn has led to that surge in the profitability, especially if we look at it on a half-yearly basis. So the first half of FY20 had a huge surge in the profit after tax. So that's of course what we are looking at currently. The company also did add that growth has been sluggish across channels. Rural demand witnessed a substantial sequential slowdown. Urban retail offtake witnessed sharp decline. The hair oil category, by the way, grew 5.9%, but value growth has been 11.6%. But anti-marks yet again declined, although 1% in volume, but it grew 6% in value. Okay, let's move on and talk about PSU banks, which are once again at the bottom of the screens. Hemain, BOB, any view you have here?
It's been moving sideways, Mamina. It's oversold. Indicators are turning positive on the intraday chart. The F&O data isn't very conducive, but 4 trading sessions we haven't broken 86, so that becomes the stop loss. It's a hold with the target of 92, and if we close above 92, then we can expect some more of an upside. Slow moving stock hasn't done much, but is on the throes of bounce.
Whole call on Bank of Baroda. Stock number 7, Varun, GTPL Hathway. Today we are waiting by for the second quarter numbers, but anything else that we should watch out for?
So basically, it's a really cheap stock. It's a 835 crore market cap with around a 350 crore debt. So you're looking at a 1200 crore EV, and it does an EBITDA of close to 400 crores. So it's trading at 3 times, which is significantly cheaper than its peers, and tends to report better numbers, which is what's actually the brokerage verdict and the street expectation today as well. So I think the move is ahead of that primarily for today.
Well, it's a double-digit surge seen on the stock price of GTPL Hathway, 16% higher. Okay, Vivek, Indiabulls Housing Finance, interestingly, CLSA has come out with a note on it. Any significant observations?
Well, Mubina, the first thing you need to keep in mind is that the impending buyback is something that the analysts on the street are watching very closely after the fact that, the proposed merger with Lakshmi Vilas Bank hasn't gone through. So what you have to look for as far as Indiabulls Housing is the buyback, the quantum of the buyback, and the price at which the buyback does come in. CLSA today has come out with a note. Now, what they've done is they've analyzed the company and they've analyzed the business model after the non-proposal or the non-going ahead of the merger. What they're saying at this point of time is that a liquid balance sheet that the company has does lend confidence. They believe that the next 15 days are key, where the company has multiple payments due, and they believe that if the company can go ahead and make these payments, it will be quite positive. What they're saying is that at this point of time, valuation comfort is something that is there, but however, they believe a rebound could take time. In fact, they see some amount of growth coming in only from FY21 onwards. They've cut the target price quite significantly and also to 350 rupees a share, and what they have at this point of time is that they're valuing the stock at one time FY19 price to book. So again, they see some amount of upside, but they're quite dim about the entire prospects of this particular company, at least post the entire non-merger coming through.
All right, 2.5% gone to over 5 rupees. Aurobindo Pharma, this one certainly has had a rough ride, especially in the last couple of weeks. Remember that we had seen the scrip tank nearly 20% after one of its units came under the US FDA scanner. And then, of course, you did have the promoter share pledge as well. The stock price had recently plunged to a multi-year low. But now HDFC Mutual Fund has hiked its stake to 7.12% from 5.11%. Remember, by the way, that share pledge did come in for so that the promoters could make up for the shortfall of security for existing loans, because of the fall in the share price of Aurobindo Pharma. So the vice chairman had informed about the additional share pledge of around 7.9 lakh shares. This was done to various lenders, and it was done approximately 4 to 5 odd days ago, just a couple of days after that massive fall that we had seen in the share price of Aurobindo Pharma. Now, in the midst of all of that, we have HDFC Mutual Fund that's hiked its stake. It's 1.4% higher for Aurobindo Pharma. All right, and Himen, IOC, BPCL, all of these stocks have been seeing a bit of strength come by. BPCL in particular, perhaps because of the entire government divestment stake. Anything that you'd like to observe or recommend here?
Very similar stock price movements, Mobina. IOC has been down for 7 trading sessions. A bounce is underway. We're seeing a very mild long build-up, nothing major. Yes, the intraday mechanical indicators are turning positive, are giving crossover buys. Simply put, 7 trading sessions down, we have a recovery is in the offing. So would have a hold, stop loss 144, target 152.
Okay. Let's take a quick look at the RWI small case and see what that one's up to at the current juncture. If it is seeing the same amount of traction that we are seeing on the benchmarks, Nifty gaining 55 points, around 0.5% higher. Rise with India small case at 546, 0.25% higher. Quick break on the show. Come right back as we'll continue the countdown. Welcome back. You're watching Market Fatafat on ET. Now let's continue with the countdown. Varun Birla Soft, stock we don't talk about very often. What exactly is it that's causing the stock to go up double digits?
So it's a major deal win actually, which will see a multi-year deal seeing them provide IT as a service to Invacare. Now the deal values for $240 million US over the 10 years, so that's approximately around 1,700-1,800 crores. Now, to put this in perspective for you, the annual revenue of Birlasoft is around 750 crores. So you're getting like 2.5 years of revenue visibility up front right from the get-go, which is huge. Also, Birlasoft is like a quality IT company that has corrected severely over the last year. The current market cap of 1600 crores currently is around 1/3 of what it was at the peak. So at the peak, it has been around 5,000 crores or close to then devalued to 1600 crores today. So with nothing really else pulling the stock down, this major deal giving you such good revenue visibility and good margins is auguring well for the counter today. Significant up move, 11.5% nearly.
All right. Well, yes, 11% higher for Birlasoft. Okay, Vivek, Bharat Forge, what does Nomura have to say? Any spot of positive commentary there?
Well, Mubina, what Bharat Forge did recently was that they had a sell-side analyst meet. A whole host of brokerages went and met the company. And what the company said was that the first thing what they're saying is that they were preparing for the next leg of the upcycle. While they did say that, yeah, we are in the middle of a down cycle right now, they believe, they've been making all the right moves to actually go ahead and benefit from the next stage or the next upcycle. Nomura has come back quite impressed. What they're saying is that even though they maintain a neutral stance, they have the target price at close to 424 rupees a share. They believe that at 10.5 times FY21 EV to EBITDA, valuations at this point of time are quite attractive. So overall, it's been a positive view, and a whole host of brokerages actually have come back quite positive after the analyst meet.
All right, 2.6% higher for Bharat Forge. IGL, meantime, this one too has got some good news from the government. It has received a letter of acceptance from the PNGRB, that's the Petroleum and Natural Gas Regulatory Board. This is for the Ghaziabad city gas distribution network. This will include investing in there's infrastructure exclusivity. So whether it is expansion, construction, IGL or Indraprastha Gas has the mandate. The stock price was gaining more than 1%, but now it's come off the day's high. All right, Himain, look at DLF. I don't know when was the last time we saw a nice 6% uptick seen over here, but the entire realty space as well is buzzing today. What's your recommendation and any trading opportunity you're spotting here?
Like you said, it's been ages since real estate has done something. It looks positive, but it has moved from 138 to 155 in just 4 trading sessions. I'm not sure if the risk-reward ratio is in favor